Welcome back. I'm Brian, and this is the 10th episode of Love and Hard Money. Today we're talking about free trade, and I'm going to share something I haven't before about my family business in chemical import and distribution. I want to start by saying something that might surprise you. I think the tariff debate happening right now, the one dominating headlines, rattling supply chains, angering allies, and reshaping global commerce, one of the most important economic conversations of our lifetime, is almost entirely missing the point. We're arguing over the tip on a meal that has already been poisoned. That's what this episode is about. Not whether tariffs are good or bad. Not whether Trump is right or wrong. Not whether we should buy American or source globally. Those are real questions with real consequences for real businesses, including mine. But they're second-order questions. They're arguments happening inside a frame that is itself fraudulent. The first-order question, the one nobody in mainstream economics or political media is asking, is this: can you have free trade when all the money itself is corrupt? I don't think you can, and I want to explain why. Let's start with something so basic it almost sounds too simple. Every transaction has two sides. You give something, you get something. In a barter economy, that's goods for goods, labor for food, a cow for a plot of land. But barter is inefficient. You need a double coincidence of wants, meaning the person who has what you want also has to want what you have at the same time. Barter is clunky. It doesn't scale. Money solves that problem. Money is the universal intermediate good. Instead of trading your labor directly for bread, you trade your labor for money, and then trade money for bread. Money lubricates the entire economy. It allows for specialization. You can't spend all day trying to invent the perfect battery if you also have to grow your own wheat and milk your own cow. Money allows trade across distance and time. It is, in the most literal sense, half of every single transaction that takes place in a modern economy. Half. Every time you buy something, sell something, sign a contract, pay a wage, price a product, or evaluate an investment, money is one side of that equation, the unit of account, the measuring stick. Now here's the question. What happens if the measuring stick is crooked? What happens if someone has their thumb on the scale? What happens if the ruler has been quietly stretched, not all at once, not so you'd notice on any given day, but consistently over decades by people who benefit from the stretching? Like we talked about last week, you get prices that lie. You get investment decisions based on false signals. You get winners and losers determined not by productivity, innovation, or value creation, but by proximity to the money printer. You get what we have now. I want to introduce a term here that comes from Simon Dixon, a British Bitcoin advocate, banker, and monetary theorist who spent decades studying how the global financial system actually works, as opposed to how it's taught in economic textbooks. Dixon calls it the proof of weapons network. The idea is this: every monetary system needs something backing it, something that gives the currency its authority, its credibility, its enforceability. For gold, that backing was physical scarcity and the properties of the metal itself. You couldn't conjure gold out of thin air. For Bitcoin, the backing is cryptographic proof of work, computational energy that cannot be faked. For the US dollar, and by extension, the entire global fiat system, the backing is weapons, military force. The petrodollar arrangement, established after Nixon closed the gold window in 1971, essentially required that global oil trade be settled in dollars. Countries that wanted oil had to hold dollars. Countries that tried to price oil in other currencies, well, history has some instructive examples of what happened to their leaders. Think here of Gaddafi, Saddam, and more recently, Ayatollah Khomeini. The dollar isn't backed by the full faith and credit of the United States in any meaningful economic sense. It's backed by aircraft carrier groups, by the SWIFT payment network used as a geopolitical weapon, by the IMF imposing structural adjustment programs on developing nations, by the revolving door between the Federal Reserve, the Treasury, and the largest Wall Street banks. That's the proof of weapons network. Central banks, defense contractors, multinational corporations, political establishments, the military-industrial complex, all with an aligned interest in maintaining a monetary system that allows them to conjure purchasing power from nothing and distribute it to themselves first, before inflation ripples out to the rest of us. This isn't a conspiracy theory. This is just how the system works if you follow the money and ask, cui bono, who benefits? And this network controls the money, which means it controls half of every transaction on Earth. So, when someone tells you we have free trade, I'd like to understand what they mean by that exactly. Let me be clear about something before I go further. Tariffs are real. Their effects are real. I'm not dismissing them as irrelevant to people's lives and businesses. I run a company that imports raw materials. I'm going to tell you some stories from my own business in a few minutes that make that very concrete. But the tariff debate, as it's currently framed, is a distraction from the deeper issue. The argument goes something like this. The free trade camp says tariffs are bad because they interfere with the natural flow of goods and services, raise prices for consumers, and invite retaliation. Protectionists say tariffs are good because they defend domestic industries, protect jobs, and counter unfair practices by trading partners. Both sides appeal to the concept of free trade as the ideal. They just don't agree on whether we have it or how to get there. But neither side is interrogating the money. A tariff is a tax on a transaction. It might be 10%, 25%, 145%, whatever the number is this week, because right now it changes constantly. But underneath every tariffed transaction is a unit of account, generally the dollar, that is itself taxing every transaction on Earth through inflation, through dollar hegemony, through the exorbitant privilege that allows the United States to run perpetual deficits and export that cost to the rest of the world. The tariff is visible. It shows up in customs brokers' invoices that I see every week. My company, my customers, we absorb it, and eventually end consumers pay it. Some of the cost may be absorbed by the foreign producer, but eventually, one way or another, the price is higher because of it. You can point to tariffs, argue about them, lobby against them. They're measurable in any given transaction. The monetary distortion is invisible. It's baked into the price of everything. It's in the interest rates that are set by committee rather than the market. It's in the exchange rate managed by central bank intervention. It's in the petrodollar premium embedded in global energy prices. You're arguing about the tip. The meal was poisoned before it hit the table. I want to get personal here because I think it illustrates the point better than theory can. I run a company called Gravitas Chemical, a specialty chemical import and distribution company. We source products from suppliers around the world and bring them to customers in agricultural, industrial, and coatings markets around the United States. And I want to tell you something about how I think about sourcing. I genuinely don't care where a product comes from. Not in any ideological sense, not as a statement. It's just the reality of running a business that serves customers. All things equal, I'd pick a U.S. supply chain 10 times out of 10. But things aren't all equal. Bolivia is rich in lithium. Gujarat, India has lots of salt resources that make certain chemicals cheaper to make there. Madagascar is a major player in clove leaf oil, but derivatives of clove leaf oil mostly come from Indonesia and China because Madagascar doesn't have the infrastructure to further process them. And of course, some parts of the world have lower cost labor. I don't care if a product comes from India, Indonesia, Peru, Thailand, China, Venezuela, Iran, or Nicaragua. Those are just places on a map. What I care about, the only thing I really care about, is whether the product I deliver to my customer gives them the best value. And best value means highest quality, lowest delivered price, best payment terms, reliable supply chain, and world-class customer service. That's it. That's the whole job. In a genuinely free market, that's how every importer, every distributor, every buyer thinks. You follow value. Regional producers emerge and defend their territory based on real advantages: geography, natural resources, labor cost, proximity to raw materials and energy, and, of course, accumulated expertise. Comparative advantage in the Ricardian sense actually works. Everybody specializes in what they're genuinely good at. Trade makes everyone richer. That's the theory. Here's what actually happens. A few years ago, I was sourcing certain products from Chinese suppliers. Good suppliers, competitive pricing, reliable quality, the kind of relationships you build over time and depend on. Then the tariffs came, and I made a business decision that any rational operator would make. I moved my sourcing to Indonesia, not because Indonesia was the most efficient producer, not because Indonesian suppliers offered superior quality or better terms, but because the tariff structure made Chinese origin product uncompetitive on landed cost. The U.S. producers of this particular product do not make enough to satisfy the market, and rather than expand production, they've simply increased their margins in response to the tariffs. The political intervention changed the price signal, and I followed the price signal. That's what businesses do. So, I rebuilt supplier relationships. I renegotiated terms. I went through the friction and cost of transitioning a supply chain: qualification, sampling, logistics, paperwork. Real time, real money. And now, with the latest Supreme Court ruling on executive tariff authority, there's a real possibility I may have to move back to China, because the legal basis for the tariffs on China may have been constitutionally questionable the entire time. The rules changed again. The signal shifted again. Think about what that means for a small business. I've spent real capital adapting to a policy that may have been illegal. And the only certainty is that uncertainty will continue. Every time I have to respond to a change in tariffs, that's time I'm not spending on developing new business or even investing locally. The stated goal of the current administration is reshoring. Bring manufacturing back to America. Rebuild domestic industry. Make things here. I want to engage with that seriously because it's not an insane idea on its face. I support it. There are legitimate national security arguments for certain domestic capabilities. Supply chain resilience is a real consideration. I understand the instinct and I wholeheartedly support it. But here's the problem. I'm a businessman and an entrepreneur. I look for opportunity. If I genuinely saw a viable opportunity to invest in domestic production, to buy land, build infrastructure, hire people, reshore a supply chain, I would evaluate it the same way I evaluate any capital allocation decision. And the math doesn't work. Not because American labor is too expensive or because regulation is too burdensome, though some of those are real factors. It doesn't work because the investment horizon for that kind of capital plant, equipment, infrastructure, is 10 to 20 years. You need a reasonable expectation that the rules of the game will be stable over that period to justify the return assumptions. When the tariff schedule changes by executive order every few weeks, when the Supreme Court may or may not uphold the legal authority for those orders, when trade policy is being made via social media posts and reversed by court ruling, you can't make 20-year capital commitments. It's not ideological, it's arithmetic. So what do rational business owners do instead? They do what I did. They shrink. They reduce exposure. They preserve optionality. They don't hire the people they might have hired. Don't build the thing they might have built. Don't make the bet that reshoring requires. And some of them, hopefully more every day, take that preserved capital and put it somewhere that doesn't require trusting a jurisdiction, a policy, or a politician. They do like I've done, and they buy Bitcoin. That's not a political statement. That's a rational response to an unstable rules environment. When the signal is too noisy to build on, you store value in the asset that is immune to the noise. I want to make one more distinction here because I think it's important and it almost never gets made in the mainstream conversation. There are two completely different things being called reshoring right now, and they are not the same. The first is industrial policy reshoring, the CHIPS Act, rare earth processing subsidies, defense manufacturing contracts, semiconductor fabs built with tens of billions of dollars of government money. These are real. TSMC is building in Arizona. There's investment happening in strategic industries. The Proof of Weapons Network is directing ungodly capital toward assets it needs to maintain military and technological dominance. But let's be honest about what that is. That's not free markets. That's not entrepreneurial capitalism. That's politically allocated capital flowing to politically connected corporations that serve geopolitical interests. Intel, TSMC, MP Materials, these companies aren't succeeding because they outcompeted their rivals in a free market. They're succeeding because they won the lobbying contest. They have access to the government spigot that you and I do not. The second kind of reshoring is the vision being sold to working Americans and small business owners. The idea that tariffs will somehow bring back the factory jobs. That the small manufacturer, the specialty chemical importer, the widget maker, will find it suddenly viable to build domestic production capacity because imports got more expensive. From what I can see, that's not happening. Not at this level of policy instability. Not without the kind of capital access that only strategic industries enjoy. The small business owner doesn't get a $1 billion grant to reshore their supply chain. They get uncertainty, whipsaw, and a shrinking margin. Strategic industries eat from the government trough. Everyone else eats uncertainty. And that's not free trade either. Let me broaden the frame for a moment, because free trade isn't just about goods. It never has been. In a truly free market, you don't just have a free flow of goods denominated in honest money. You have a free flow of people. Labor is a factor of production. In a genuinely free market, people would be able to move with minimal friction from one place to another, to go where they're treated best, where their labor is most valued, where opportunity exists. Look at me. Now I'm pissing off both sides. Right now, that's not what we have. Moving across borders legally, permanently, productively requires either a very specific set of circumstances like family ties, employer sponsorship, or transnational levels of capital. A second passport or residency in most desirable jurisdictions costs hundreds of thousands of dollars in investment minimums, years of bureaucratic process, and often the right political connections. That's not a free market in labor. That's a managed market that serves the interests of the states and existing capital holders, not working people. That creates an exploited migrant class that is both economically vulnerable and politically useful. In the U.S., that system doesn't benefit migrants or Americans in any meaningful way. I would argue it's been weaponized against both groups. In a world of honest money and genuine free trade, a skilled worker in Vietnam who is more productive than the available work in their home market can utilize should be able to move to where their labor is needed, receive fair compensation in a unit of account that can't be debased by either their home or host government, and build a life without requiring the kind of capital that only the wealthy possess. And here's the thing. That free flow of people in a world of honest money would also resolve most of what we call the immigration problem in the West. The immigration crisis is partly a product of monetary distortion. Dollar hegemony impoverishes developing nations through inflation export and debt traps. People flee economic devastation that is at least partly manufactured by the proof of weapons network. Then we blame the people for moving. For a good primer on this, I recommend the book The Confessions of an Economic Hitman. In a world where Honduras or El Salvador or Guatemala had access to honest money, where Bitcoin was the unit of account and local governments couldn't inflate away the purchasing power of their citizens, the economic desperation that drives mass migration looks very different. People move for opportunity, not survival. In the case of Latin America, those countries are some of the most resource-rich in the world. In a free market, there would be plenty of work for people in their home markets and little incentive to move away from family, culture, and a way of life that they know. Free trade, honestly understood, is free people and free money, not managed goods flows denominated in a weaponized currency. Imagine a world where no one is in charge of the money. Not the Federal Reserve, not the Bank for International Settlements, not the Treasury Department, not the IMF, no committee, no chairman, no proof of weapons network, just two people, two businesses, two countries, settling value directly with each other, peer to peer, with no intermediary who can inflate, freeze, sanction, or seize. What does that world look like? Trade happens based on actual value. If two countries want to do business, they do business. If they don't, they don't. There's no dollar hegemony forcing developing nations to hold a currency that gets debased on a schedule set in Washington. There's no SWIFT network that can be weaponized to exclude a country from global commerce because it made the wrong geopolitical choice. You either offer something worth trading for, or you don't. That's it. And war. War becomes an honest proposition for the first time in centuries. Right now, governments finance wars without explicit popular consent. They don't come to you and say, "We'd like to spend $2 trillion on this conflict. You in?" They print. They issue bonds, the central bank absorbs, they inflate the cost invisibly across every dollar you hold, every paycheck you earn, every price you pay at the grocery store. The proof of weapons network funds itself quietly from your pocket without your vote. In a Bitcoin world, that mechanism is gone. You want to fight a war? You pay for it honestly. You tax your population explicitly, and they either support it or they don't. You issue bonds at real market rates, and real buyers either believe in the cause or they don't. The moment the population decides the war isn't worth the cost, the funding stops. No printer to bridge the gap. No invisible tax to paper over the difference. Consent becomes mandatory, not performative. And here's the point that I find most remarkable about this vision. Even if you lose the war, the other side can't take your money. Every empire in history has ultimately been a resource extraction operation. You conquer territory to seize its productive capacity, its wealth, its monetary base. That's the business model of empire, going back to Rome. But you cannot occupy the Bitcoin blockchain. You cannot seize a private key at gunpoint. And even if you could seize one person's keys, you cannot seize the network. The 21 million coins don't care who won the war. The ledger doesn't recognize the treaty. Individual sovereignty over wealth becomes, for the first time, physically enforceable without an army. This isn't utopia. People will still have conflicts, countries will still have disputes, trade wars, diplomatic failures, and yes, real wars will still happen. But the financial architecture that makes perpetual empire profitable, that lets the proof of weapons network fund endless foreign policy adventurism on the backs of ordinary people who never consented, that architecture requires control of the money. Take away control of the money, and you take away the business model of empire. We're going to go much deeper on this in a future episode, but I wanted to plant the flag here because it's the destination that makes Bitcoin worth fighting for. Bitcoin is honest money, and honest money isn't an economic preference or an investment to make more dollars. It's the infrastructure for a more peaceful world. So where does that leave us? The tariff debate will continue. It will dominate headlines, it will move markets, it will whipsaw supply chains and force businesses like mine to make costly adaptations to policies that may be reversed next quarter. It's real and it matters in the short term. But it is a second-order argument, a debate about friction on the edges of a system whose foundation is broken. You cannot have free trade without honest money. You cannot have honest money while the unit of account is controlled by the proof of weapons network, by the alignment of central banks, defense contractors, political establishments, and multinational corporations that benefit from the ability to conjure purchasing power and distribute it to themselves first. Half of every transaction is money. If that half is corrupt, the transaction is corrupt. The price signal is lying. The measuring stick is crooked. And no amount of tariff adjustment, trade negotiation, or reshoring rhetoric changes that. The money is broken. Bitcoin doesn't fix everything, but it fixes the money. It gives us, for the first time in the modern era, a unit of account that no government controls. No central bank inflates, no weapons network backs. A measuring stick that is the same length today as it will be in 20 years. And when the money is honest, trade has a chance to be free. Not the managed, politically allocated, strategically distorted version of free trade that both parties argue about. Actually free. Based on actual value. Denominated in actual scarcity. That's a world worth building toward. Thanks for listening to Love and Hard Money. If this episode resonated, share it with someone who's stuck in the tariff debate without asking the deeper questions. And if you're a business owner trying to make sense of an increasingly unstable environment, you're not crazy. I'm there with you. The signal really is that noisy. Just stack accordingly. Until next time.